Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, September 14th. Firstly to the S&P 500, and here we see a fairly uninteresting trading day, a very much smaller range than we've seen for quite some time in this market. And what we see here as the market has been moving through the last couple of weeks is the range continually becoming smaller, and suggesting that neither the buyers nor the sellers are becoming less eager. It's really about a lack of interest from both sides here. We did see a change of trend today with the market forming a high and a higher low. But we have seen formation of a black body candle, so a switch in momentum from the upside to the downside. So with that momentum of the previous day's trading and the day prior to that, it was to the upside, and there was a suggestion that the market could trade higher. It did, but then we saw selling coming into the market. Closing just under the midpoint level suggests that we have the sellers just slightly in control, not strong control, so it does raise doubt about whether they will be able to change the trend to the downside. Looking to very strong support at the Tenkan-sen around the 1945 region. But if the sellers are able to breach down through there, we have some strong support around 1940, and a breach through there could see the market trading down to 1925. If we do see the trend continue, and there's no guarantee of that with the downside momentum in net terms and the sellers taking control, the buyers will need to be strong enough to breach up through the 1968 level of resistance. There still is a possibility of the market trading higher. We have seen the market making a series of higher troughs here within this congestion area. And if we look at this pattern that's been forming, something of an ascending triangle, a symmetrical triangle, not quite symmetrical though, more of probably an ascending triangle, and suggesting that there's a possibility of a breakout and a close up above the upper barrier, but in line with the market being bearish in the longer term and medium term time frame, a breakout to the downside is the more likely way that the market will move in line with those higher time frame trends. With the market trading well down below the Ichimoku cloud, the market is a long way away from that equilibrium suggested by the cloud. The surprising thing has been the inability of the market to trade through the Kijun-sen to reach that equilibrium. So it's saying something about the lack of strength of the buyers here. And this also suggests that there's a greater probability of the next move being to the downside. But, as always, we can't preempt the market. We have to wait for the breakout. The first clue would be a strong bearish breakout down below the Tenkan-sen, and then a close down below that bottom barrier. And what we'd like to see then is some strong follow-through, but we do have some solid support all the way down through there. Next to the Dow 30, and very similar type of trading activity here, a black body candle. Sellers have closed with control, only just a switch in momentum. All of the things that were true about the short-term dynamics in the S&P are very similar here with the Dow 30. Stronger support, however, just around this 16312 level, just below where the market's traded to at the low. We have seen some support coming in around that level with the Tenkan-sen trading there. So that's going to be an important benchmark, as will the Kijun-sen indicator just above around the 16,500 level. So here we have an interesting market between that mid-term time frame and the shorter term time frame, with the market caught between the resistance overhead at the Kijun-sen and the support below at the Tenkan-sen. Resolution more likely to be to the downside, in line with the market being bearish in the longer term time frame but trading below the cloud, and supported by the Chica-span suggesting downside, but we can't preempt the market. And with the patterns here, this pattern is still intact. It's an unusual type of pattern. That move down was quite volatile. The lows here are fairly well defined in the last couple of weeks, with the bottom barrier. A close down below that bottom barrier and a bearish close would suggest downside, but we certainly could see the market close to the upside. So let's be patient and wait for the market to close outside of either barrier. Next to the Nasdaq 100, and similar type of trading activity here. So unusual that we have all of the three equities markets pretty much mirroring each other. We have the sellers coming into the market, changing momentum from the upside to the downside, but this candle has closed more so around the midpoint level, probably a little bit closer than the other, so neither side has really taken control. So this suggests that even though the trend is still to the upside, we're not seeing a lot of strength. The strength here is in the change in momentum, so that suggests possibility of change of trend. if we do see these sellers come into the market and attempt to trade lower, very strong support all the way down to the 4280 level, but the resistance above is much more stronger. That zone of resistance extending up to above the 4395 level, and then all the way up through to the 4448 level. Very strong resistance overhead. And this pattern here, the market forming something of a wedge type pattern, coming close to that upper barrier for today's trading, with the sellers or the buyers losing commitment and the sellers finding downside momentum. Not a lot of faith in the market reaching there tomorrow. Good possibility of the market changing trend. But the sellers certainly aren't strong in this market either. The only information we have here of strength of the sellers is the switch from a white body to a black body, so we have downside net momentum. Just taking a look at a few of the sectors and using the ETFs to compare them to the overall S&P 500, comparing those ETFs to the SPY ETF here. Here we see a bearish market with XLK, the technology sector. It is the stronger of the sectors here. Trading up above both the Kijun Sen and the Tenkan Sen, but still down below the Ichimoku cloud. So long-term negativity in the market, but bias to the upside in the medium and fast-term timeframes. A smallish black body candle and still in an uptrend, but suggesting we could see the market come off. Looking to the Tenkan Sen to hold a support at 39.80, but relative strength is still strongly outperforming, and momentum of relative strength is still performing quite solidly. So suggesting that this market is outperforming the overall equities market, and if we are trading equities, we should be looking at allocating here. The consumer discretionary sector, XLY is the code for the ETF, is another fairly strong outperformer. We have the market trading above each of the Ichimoku indicators, but still down below the Ichimoku cloud on the daily charts. Relative strength comparative is still up above that upper band, and momentum of relative strength is still trending up, although not as strong as it previously was. And looking at XLB, the materials sector is one of the weaker sectors, trading down below each of the Ichimoku indicators now. Previously attempting to trade up through the Kijun Sen and the Tenkan Sen and failing to do so, holding as resistance. For today's trading activity, we've seen the sellers come into the market, closing with control, and at the moment, in terms of relative strength against the S&P 500, underperforming, trading down below that lower band, and suggesting we could see continued downside here. Momentum of relative strength is now back below 100% and beginning to trend down strongly. So if we see strong follow through here for tomorrow's trading, we could see this sector continue to sell off. Just looking at some stocks now, and Facebook is one that we're looking at, and here we see a continuation of the trend to the upside today. A fairly good bounce off the Tenkan Sen indicator, trading up through the bottom of the Ichimoku cloud to give us a neutral market in big picture terms. Formation of a doji candle here does raise some doubt about whether the market will continue trending over the next few days. So looking for a potential pullback, but we need confirmation. So looking for a lower high and a lower low, but very strong support all the way down to the bottom of the cloud around the $89 level. In terms of relative strength, strongly outperforming the overall market over the last week or so, trading outside of that upper band. But just looking at the momentum of that relative strength, and it just has started to come off a little, not in a major way, but there is some doubt, and based on that doji candle, there is some doubt about whether the market will be able to continue the trend to the upside. If we do see the trend continue, potentially strong resistance at the top of the cloud at 93.75. Next, looking at Nike, and a market that's bullish in the medium and fast term timeframes, trading above each of the Ichimoku indicators. The day prior to today's trading was a very solid white body candle with the buyers in control and strongly committed. Very strong upside momentum, but we see a weakening of the candle with the size of the body drastically reducing, suggesting that the upside momentum in net terms is no longer as strong with the buyers as it was previously. We do have potential for a breakout here. The buyers have continued with control, so even though the net momentum has weakened, there still is potential for the market to continue trading higher. And if we look at relative strength comparative, we're just trading outside of the upper band, so suggesting that we could see a continuation of that trend, and also momentum of relative strength is continuing to trend up quite strongly and up above 100%, so a good possibility of the market trading higher. However, with the formation of that small body, as I've mentioned, there is potential for the market to come off, so looking for that, but watching the high here very closely for the buyers to continue to come into Nike. Looking next at Sprint Nextel, S is the code, and here's a market that has been coming off recently. We saw a very strong outperformance for quite some time, probably over a period of a month, rallying from below each of the Ichimoku indicators to give us a bullish market in a longer term time frame. But then about a week or so ago, we saw the market hoping to find some support around the Tenkan-sen, and then we saw the bearish breakout down below the Tenkan-sen and the market not being able to breach up through there. Today's price action has been quite important, where the market has rallied, changing the trend technically to the upside in the first term time frame, forming a higher high and a higher low, but the sellers have closed with control. And we've seen very strong price rejection from the Tenkan-sen, and the buyers lose commitment around that area. This suggests that we could continue to see sellers in this market, so looking for another lower high and lower low to take this market lower. Potentially strong support around that low there, about 469, but if that area is breached, we could see the market trading lower. In terms of relative strength, that performance is now quite neutral, but if we look at the momentum of that relative strength, it's trending down very strongly and suggesting that we could see this market to start to underperform if that momentum continues to the downside.